Forex markets continue to consolidate in a tight range so far today. Asian equities are broadly lower following late selling in the Dow and S&P 500, but selling pressure is so far mild. The euro stays firmly in a tight range against the dollar and yen, and markets look beyond today greater than at the German Constitutional Court's ruling on the €500 billion permanent bailout fund tomorrow. The ruling is on a preliminary injunction, requested by a group of conservative German politicians, that could prevent the parliament from ratifying the treaty governing the European Stability Mechanism. The ruling is particularly important at this time, as troubled Eurozone countries are expected to tap into the ESM for qualifying into the ECB's outright monetary transactions bond buying program. Markets are so far optimistic based on the fact that the court has granted Parliament powers on the European Financial Stability Facility last year. Nonetheless, there are chances that the court could impose a veto power over the ESM by Germany, and any strings attached to the ESM will be seen as mildly negative. In Greece, Prime Minister Antonis Samaras said that he failed to secure agreement from his coalition partners on the €11.5 billion of fiscal reduction required by the EU, IMF and ECB. The condition is for securing the next tranche of financial assistance from the Troika. Finance Minister Yanis Tournaras said that the meeting with the Troika is a difficult discussion, although the government has been trying to convince them on the soundness of our positions. Talks regarding bailout conditions raised concerns about the situation in Spain. Prime Minister Mariano Rajoy stated that he believes the bailout conditions would be reasonable and he will request for funding if he deems it suitable for the country. Yet, Rajoy said that he could not accept that they tell us which are the concrete policies in which we have to cut or not cut. For instance, Rajoy stated that pensions is an area that cannot be reduced because the pensioner is the most fragile person. Another main focus of the week is the Federal Open Market Committee meeting on Thursday. Markets will probably remain cautious ahead of that too. We still believe that the current situation doesn't warrant immediate additional easing, in particular considering the ECB's OMT announcement having already given financial markets a very strong boost last week. Nonetheless, markets have some hope that the Fed will give more hints on when and what kind of additional easing will be implemented. Also, the Fed will release new economic projections and might push the low-rate pledge into 2015. On the data front, the UK Royal Institution of Chartered Surveyors house price balance improved to -19 in August. In Australia, the National Australia Bank's business confidence figure deteriorated to -2 in August. Japan machine tool orders dropped 2.6% year-on-year in August. The UK, Canada and the US will release trade balance figures today, while Canada will also release housing starts. Euro Sterling daily outlook. With the 4 hours moving average divergence crossed below the signal line, a temporary top is in place at 0.8009 and intraday bias is turned neutral. Some consolidations could be seen, but the downside of a retreat should be contained above 0.7886 and bring another rally. Rebound from 0.7755 is expected to continue, and above the 0.8009 level will target a 100% projection of 0.7755 to 0.7962 from 0.7886 at 0.8093 first. A break will target the 0.8152 key resistance next. In the bigger picture, price actions from 0.9799 are treated as a long-term consolidation pattern, with a fall from 0.9083 as the third leg. Strong support is expected inside the 0.7693 to 0.8186 support zone to conclude the consolidation. The break of the falling channel from 0.9083 serves as the first signal of completion of the fall from 0.9083, as well as the consolidation from 0.9799. A break of 0.8152 will further affirm this case and would target a test on the 0.9083 key resistance next.